Welcome to the Economy's Data Hub, your go-to place for decoding big economic trends and turning them into smart investing moves. In today's episode, we're diving into the global GDP rankings. Who's leading the race, who's slowing down, and most importantly, how do these numbers impact you as an investor? The U.S. tops the list with a massive GDP of $27.94 trillion in 2024. Key drivers: strong consumer spending, steady labor market, and major investments in AI, green energy, and semiconductors.
Despite high interest rates, the U.S. economy hasn't missed a beat. The dollar remains king, and Wall Street keeps attracting global capital.
China ranks second with 17.7 trillion GDP, but the growth engine is cooling due to a deep real estate crisis, think Evergrande and Country Garden, high youth unemployment, and global supply chain shifting to Southeast Asia and India. In fact, the gap between the U.S. and China has widened by over $3 trillion since 2020.
China is still a global manufacturing hub, but now it's trying to pivot from exports to domestic consumption, and that transition is proving tough.
Germany's third with $4.43 trillion, but struggling with energy costs after the Russia-Ukraine war. Japan is close behind at $4.23 trillion, but the yen's historic depreciation makes the GDP appear smaller in USD.
Japan's GDP shrank in dollar terms, not because the economy collapsed, but because the yen did.
India now ranks fifth with a GDP of $3.73 trillion, leapfrogging the UK and France. Why is India booming? Young, tech-savvy population, digital infrastructure exploding, and global firms relocating supply chains to India.
By 2027, India may surpass Japan and Germany to become the world's third largest economy.
UK, $3.33 trillion, steady, but Brexit still haunts economic momentum. France and Italy are folding stable but lack innovation-driven growth. Canada and Russia are around $2.2 trillion. Russia keeps surprising analysts by staying resilient, thanks to high oil exports and strategic ties with China and India.
G7 nations still dominate in dollar terms, but they're growing slowly. BRICS countries, Brazil, Russia, India, China, South Africa, now with new members, are making bold moves to de-dollarize and build new financial systems. The real shift is capital is quietly flowing east to India, Southeast Asia, and parts of Africa.
GDP isn't just a number, it's a signal. It shows you where money is moving, where the next wave of growth is happening, and where you should be looking. The U.S. remains a safe bet for long-term investing, especially in tech. But if you're looking for exponential growth, India and Southeast Asia should be on your radar.
Thanks for tuning in to the Economy's Data Hub. If you found this episode helpful, don't forget to hit subscribe, rate us 5 stars, and share it with your financially curious friends.